GM, GM, trade of the day. This is a very different trade of the day. So today I'm actually going to bet on the Fed rate cut. So there's been a lot of talk about will the Fed cut rates in the March meeting. So obviously they had the meeting on the 31st of January. Powell talked about that it's not their base case to cut in March. He didn't say no. He said it's not what their base case is. And I've spotted what I think is a mispricing using Polymarket. So Polymarket is a prediction market. It's actually a crypto-based uh, protocol or project. Really cool. You can bet on a bunch of stuff. You can bet on presidential election. This is the biggest betting election market in the world. There's been 40 million bet on it, as far more than any of the mainstream prediction markets will allow you to bet. Predict it is the like the traditional political one, nothing to do with crypto, and it has a maximum bet of like $800 or something. This one's a proper. This is a proper market made by traders amongst themselves, and is I think Polymarket's going to have a huge year this year because of the election mostly. Prediction markets is something that I've tracked for a long time. Obviously, I have a background of betting and in the gambling industry. I think prediction markets are super fucking like they're a great use case for crypto, unbelievable use case, because people want to bet on things, right? This is why you trade. But if you can outright bet on things and this becomes bigger, it goes beyond like not just politics. Politics is the obvious one, but you can see in crypto, right? You can bet on Bitcoin all time high, ETH hitting a certain price. You can bet on airdrops. You can bet on ETH ETF, right? All that kind of stuff. I don't know how much it will pick up. Whether people will really take to them or if they just want to keep buying altcoins and gambling. But prediction markets, I think, are like a big thing for the next decade because everything in life now is becoming more gamified. And so if you're able to put your money where your mouth is and bet on certain events, I can see that really becoming more and more popular. Not again, it's not just in crypto. You've got sports, you got business, you got politics. There's loads and loads of potential for this. What about liquidity? What's liquidity about? Is that liquidity to do with? Don't know. Anyway, the one I'm looking at here is the Fed rate cut. So currently on Polymarket, the bet is 11 cents, meaning if you bet 1,000 shares, right? If you bet $110, your potential return is 1,000. So it's about 9 to 1, roughly, depending on where you're from. You'll have different odds mean different things, but it's roughly 9 to 1 odds. So you put on 100, you make back 1,000. So you make 900 profit, roughly. That means that it's basically a 10% chance, as you can see here. And there's a slight spread because of the liquidity, supply and demand dynamic. 10% chance is what this prediction market is saying for the Fed rate cut. But the Fed Watch tool, which are the Fed funds futures that traders trade on, is at 20%. So right away, there's a disparity there. This is far more accurate than this, right? Because this has 800,000 bet on it. This is literally the CME. I think it's CME. Who does the futures for? Not sure if it's the CME, but it is the futures for betting on Fed funds, and this is far more active and far higher predictive power, in my opinion, because this is like how TradFi are betting on it. So they have it at 20%. Polymarket has it at 10%. So if Polymarket is at 10%, you'd have about 5 to 1. Instead, you're getting almost 10 to 1, 9 to 1. So there's a bit of edge there, but it's not even just that. I also do think that there are plenty of things that can happen between now and the 20th of March that can cause Powell to cut. In order, you've got banking crisis, right? If the New York's community bank and all the commercial real estate stuff gets worse, the Fed might start to ease up on their stance and say, okay, we've tightened enough. Also, tomorrow we've CPI revisions, which means every year they go back through the previous year's CPI, which is the inflation readings that come out every month. They go back through them and they revise them. If you remember, in 2023, at the start of 2023, they revised the 2022 figures higher, right? Saying that inflation actually was worse than they were saying. This year, the potential is actually the opposite, because there's other measures. Trueflation is one. There's other measures of inflation, specifically trueflation, which actually shows that US inflation is actually much lower than what they think. And they have it at around 1%, I believe. 1.5%. 1.41. That's the daily trueflation rate. They have their own measure. Their measure is very interesting. It's not fucking made up out of nothing. There's actually a podcast where the guy from Trueflation, is interviewed by Pomp, who's a crypto podcaster, Bitcoin guy, and he talks about it. It's an interesting one. I'll link it along with this trade of the day. But the US reported rate is 3.4%. They're saying that it's 1.4 based on what they measure. And Trueflation were also saying that, whenever, I don't know if how much they have, but Trueflation were saying back whenever the inflation was rising, they were ahead of it, right? Whenever CPI was still low in 2021, Trueflation was much higher. They were like, no, inflation is real, it's here. And so the idea of Trueflation is that it's faster than the official rating. And it shows the general trend. Is inflation 1.41% right now? Nobody knows. But the idea is they believe that they're ahead of inflation and it's actually lower. It doesn't mean it's going to stay lower. But this would mean, if that's right, there's a good chance that the next inflation readings actually come in a bit lower. And if they come in lower, Powell can cut. He's currently restrictive. You've got inflation at 3.4%, but Fed funds are at 5.5%. That's restrictive. There's a lot of talk and pressure to say your interest rate should be down at 4%. Right? That would be more like a balanced Fed funds rate. So the only reason they haven't cut rates yet is because broadly everything's fine. Stock market's doing fine, economy's fine, employment's fine, but mostly inflation is still not back at 2%, and they don't need to wait for it to come to 2%. They just need to see it continuing to go down. So one of the things that could show that would be CPI revisions. If there are revisions tomorrow to the downside, that's going to ramp up the narrative to Powell saying, look, you've beat inflation, cut rates. And the other thing that's coming up, so that's tomorrow, which is why I'm putting the bet on today. Tomorrow could really shift those odds in Polymarket. Then next week, we've got CPI on Tuesday. So here's CPI, that's the inflation measure. That has next Tuesday. The expectation there for year over year is 3.4. Right, they're expecting 3.4. Sorry, previous forecast is they don't have a forecast yet. Then we have core PPI, which is a different measure of inflation, which is on Friday next week. And then at the end of the month, we have core PCE, which is, where are we here? Wednesday, must be the following week. Core PCE is on Thursday 29th. There we are. So these are all coming up before the next meeting. This is what's going to make the Fed choose to cut or not. If we see CPI coming in lower, if we see PCE coming in lower, and if we see a revision of the last year's CPIs to a lower level, I would expect them to actually cut in March. And I think the narrative will really ramp up towards them cutting. Also, if we have a pullback in the markets, it'll make it more likely. And I do think that the S&P and the NASDAQ and all, they've pumped up quite high. They could easily have a pullback. Not a crash, but they could pull back. And if you have some banking crisis stress and all that kind of shit, I don't know. Me personally, and this is just me, this is not a recommendation. If you're going to trade something, make your own decision. I am putting money on this. It's a 10-1, so I'm putting a very small bet on 1% of my trading portfolio. No need to go crazy. It's like a 9-1 payoff. But I personally don't think that 10% is the right number. So I think it's mispriced. I think maybe it's 20, like the Fed says, like the futures say. Maybe it's 30, maybe it's 40, but I don't think it's 10. So to understand this, you need to understand probabilities. Even if I think it's 40%, that still means it's more likely to lose than win. But if it wins, the payoff's 9-1. That makes it plus EV. So I see it as an asymmetric bet, and that's what I'm going to take. So that's how I'm going to do it. GM, See you all later.